Okay, this video is going to show how to prepare a statement of cash flows. So we have our fourth and final financial statement, which is the statement of cash flows, and it is going to categorize all of our changes in cash for the period. So our change in cash can be seen on the balance sheet. We went from $585,920 up to $625,760, so our change for the period is $39,840. So our task is to categorize all of those changes that happened to cash during this period. Here's how we're going to do it. We're going to separate it into three categories, and the first one is operating activities, where we're going to put everything from our day-to-day operations. And there's a video telling us why we do what we do. But for this purpose, I'm just going to run briefly through it. We begin with net income. We add back our depreciation. We remove our gains. And if we had any losses, we remove our losses. And then we analyze our current assets and current liabilities. And we add and subtract according to the rules that are on the separate video. And we get down to a net cash flow from operating activities. Next, we move on to investing and financing activities. These are more straightforward because we're not trying to back into any numbers. We're just going to take what happened to cash for each of these categories. So investing activities has to do with long-term assets. So we're talking about land, equipment, vehicles, investments, long-term assets, whatever they may be. If you have a sale of long-term assets, we are looking to put the proceeds from the sale. In other words, how much money did we get? That's what will belong here. If we purchase an asset, long-term asset, we will be putting down the purchase price that we actually paid. If we had some that we took out a note for, that doesn't go here. Only the amount paid. So we're talking about long-term assets. Under financing activities, we're looking for everything that happened that we needed to finance our company for. So we're talking about long-term liabilities such as bonds, and also anything that happened to our stockholders' equity section, such as stock, payment of dividends, and any purchases or sellbacks of treasury stock. So that's what we're going to have down here. And then to finish it out, we will add together our operating, investing, and financing activities. We will place our beginning cash, $585,920. When we add these two together, we should get to our ending cash. And of course, you recognize this number as that was our net change in cash that we were looking for. And here we go. We categorized it. $143,540 was a positive from operations. We had a negative of $200,000 from investing, and a positive of $96,300, getting us to that net change. So that's what I mean when I say we categorized it. All right, let's look and see how we do this. Cash flows from investing activities. So we'll be looking at our long-term assets. And here is one, and it went from $240 to nothing. So it looks like we sold it. But we need to know exactly how much we sold it for. So if I look down here in letter A, it says the investments were sold for $280,000 cash. That's the number I need, $280,000. So that's the number that I place here. And I just describe it, cash received from the sale of investments. All right, the next one that I'm going to look for is what happened to my land. So I went from having none to having 328. So I need to find out whether or not I paid cash for that. Well, it says that equipment and land were required for cash, so I can assume that I used $328,000 worth of my cash to purchase that land. So I would put cash paid for purchase of the land, $328,000. For my equipment, I went from $553 up to $705, which means that I purchased more equipment. And so I can assume, since it tells me that it was all acquired for cash, that that change of $152,000 was paid out in cash. When I net these numbers together, I actually have a negative, which means that I call it a net cash flow used, because it was negative, for investing activities. If it had been positive, it would have said from investing activities, but it was used because it happens to be a negative number. I spent more than I brought in for these investing activities. Now, there will be a separate video that tells you how to calculate the cash received if it would not have been given so clearly to me, because you can actually reconstruct your journal entry that would have come about that from from information given and figure out how much cash if it wasn't given to you in this other information. And so there'll be a separate video to show you how to do that. Let's look at financing activities. We'll be looking at everything that happens in long-term liabilities, issuing our own company's stock, paying out dividends, and buying and selling our own company's treasury stock. So, cash received from sale of common stock. The way that we'll see that is that it's made up of two things. It's made up of the change in common stock and paid in capital in excess of par. So these two numbers together, which equal $187,500, that is the cash that we got. And that's because when you issue stock, you get cash, and you put the par value down at common stock, and the rest goes to paid in capital in excess of par or in excess of issue price over par. So those two numbers together have to be looked at to get to our cash from stock. And then our paid out for dividends. In this situation, it tells you that we had $96,000 debit to retained earnings for cash dividends declared. Remember, we have those 3 dates for dividends: date of declaration, date of record, date of payment. So the date of declaration just sets up the payable. So we need to look at dividends payable to also see if we've paid it all out. And so here we went from $19,200 up to $24,000. So what we have to do is say, you know, I declared $96,000, but my dividends payable went up by $4,800. So of those, I haven't paid out $4,800 yet. So the number that I'll use for my dividends, the actual cash, I back into it and find out that it's $91,200. So $91,200 goes there. I net these two numbers together, I get to $96,300. And also on a separate video, there will be a way to show you how to calculate dividends when you're just given the beginning and ending retained earnings and net income. All you do is reconstruct the retained earnings statement and you've got your answer. That'll be a very short video. This is an overview of how to prepare the statement of cash flows using the indirect method.